When you catch trades like this and you send it out to your community, there is literally absolutely no reason to do a trade recap. So that's what we're doing right now. 400 pips down, XAUUSD, April 23rd. Here's how it went down and exactly why I got in and why I sent it out to my community. So as you can see here on the 5-minute chart, we got gold and it was really clean setup over here, obviously in hindsight, but I want to walk you through step by step why I entered this when I did, as well as what the context of the entire market was, because gold has been super bullish. So there's really no reason to go short. But there was a couple key signs that you need to keep in mind if you want to start making these types of trades, especially when it's something like 400 pips. Because that's something that not a lot of people are catching, and it's very hard to measure it when you're looking at the whole picture, but this is going to make it really simple. Let's start off with what I marked off as my daily bias from last night. And last night we had the close of the candle happening over here, and our previous day high and our previous day low. So this was our markup, and we had a big candle closure that happened. And so I was looking at filling up this daily imbalance. And so that's what I decided to do. Right now, the market is not open, it's closed, so we're not seeing any movement at all. But obviously, it's my post-market analysis. That daily fair value gap seemed like a really good target after we had a close bullish. And so I looked at smaller time frame to see if anything was setting up. And I saw this bullish imbalance here that we disrespected. And I called out last night that if we disrespect this bullish imbalance, we're likely going to continue to go lower bearish into one of our targets here. And the daily seemed the most likely because we also had an overlap with a 4-hour fair value gap right here. When you see imbalances within other imbalances, it tends to be a really strong confluence. And so that's what I was looking at. When I woke up, I got up at 6 a.m., did a workout with my girl really early and went to the sauna. I was in the sauna actually looking at the charts until my phone started saying it was too hot. So I'm like, all right, cool, we're not going to look at it. I saw a divergence at these highs, and this was on the hourly chart, and so this was huge. On the 15-minute, again, it's a clearer picture of what that story is telling you, and of course, we had a break of structure to the downside on the 15-minute time frame. We had a 15-minute imbalance get filled, and it was completely respected, and that was a huge sign for me, especially seeing that we had a divergence play here on gold with silver. So seeing that in motion, I'm like, okay, we're going to close below, we're going to tap into something significant, and so that's what we were looking at. As soon as this divergence happened at 7:25 a.m., at this point, I was just wrapping up my shower after getting the whole morning done. And I looked at the 1-minute chart to see if we'd get any closures to the downside that would happen right after this divergence. We swept liquidity on silver. You can see that Monday 8 p.m. to the Tuesday 12 p.m. And that same area, that Wednesday 5 a.m. candle with our Wednesday 7 a.m. candle. So the same day, couple hours apart, you can see that we had the divergence. On silver, in the same area, we had a sweep of liquidity, which we didn't see happen on gold. So you can see, of course, the difference here. And so that's why we marked it out. Going down to the 1-minute chart to really fine tune this entry, we had a break of structure to the downside, and we had this 1-minute fair value gap form. We just tapped into it. And so for me, that was an entry point. Again, I'm not always going to just take the first wick that enters an imbalance because that can often be a trap. But I actually trade futures as well. So when I was looking at the futures chart, I saw we went into a deeper fill. And it was about 30% of the imbalance. So I said this will be a pretty good area for us to get into. I sent out the trades to my community, and we ran down to our, as you can see, these are the TP lines. So 1, 2, 3, and 4. We ran down to TP4, retraced all the way back to break even, filled this 1 minute, and we continued lower. I let our conservative traders know, of course, move stop loss to break even after a TP4, which was at that point it was around 154 pips. So that's a bag. Like, you can take that and there's no problem with that. And then after that, we retraced into the 1-minute imbalance, continue to go lower. And that was where we continued on and just dumped. We dumped completely all the way down. And when you want to ask about targets, like what we're targeting as far as where the market's going, we had this daily imbalance that was right below us. And on top of that, of course, I mentioned the 4-hour fair value gap. So you combine all these points of interest with your small time frame entry, and you got a really good position to go to the downside. So we dumped as we expected, and it actually went way further down than the 400 pips that we called out. But from our entry all the way down to the bottom of the day was 720 pips. So of course, I'm not going to get greedy and trade all the way down to that level. I don't need that. Enough money is being made with this move, which is a smaller move, but it's still massive, right? And we got this liquidity level that we reached. So moral of the story is, when you are looking at entries, you have to remember that these things will come back on you. And I've seen moves like today where you have 100, 150 pips reverse completely back to break even to fill a small time frame imbalance. hit a small time frame order block, hit a very small time frame liquidity and sweep it before we get anything continuing down to our target. And so this is where stop placement is really important, because if your stops are way too tight, you're going to screw yourself over, because you're going to be in a position where your bias was right, your entry was right, everything really made sense, but now you're stopped out of your trade that you called out. And honestly, hitting stop loss is one thing, but hitting stop loss on a trade that went in your direction, it hurts so much more. As a beginner trader, that was one thing that frustrated me. And here's a perfect example of how you can see that you'll get a retracement up into this level, will fill something, continue to go lower to the downside, and just without any real resistance at all, go down and hit the target that we marked out last night. And this is how you can take a really, really bullish asset like gold has been, because in the grand scheme of things, gold has no reason to continue to go lower. It only has potential to go to the upside at this point. And it's not only the price action, the technicals that go into that. We're also talking about the fundamentals. With what's going on in the world, you talk about what Trump's doing, what he's planning on doing with all these tariffs, the US dollar and its effect on a commodity like gold, which is a store of value. So when the US dollar goes down, gold goes up. And you want to see a good example of that, we were super bullish on USD CAD all day today. The US dollar, including the DXY, you can see we're super bullish. And what did that do to gold? It tanked us. So you have to be mindful that there's a lot of other things at play than just small time frame price action. I take trades on the 1 minute and the 3 minute and sometimes the 5 minute. But I'm basing this off high time frame bias, because once you have the high time frame picture, it gives you the overall story. And once you have the narrative of what's going to happen, it makes the small time frame entries really accurate. And a lot of you guys will find yourself, with your favorite influencer strategy or whatever it is that you're using. Sometimes they're not going to work. And the reason is because not that the strategy itself doesn't work or the fundamentals of that strategy aren't solid. It's more so that you can't take a trade off any fair value gap, any liquidity sweep, any order block and expect to make money. You can't just target London highs, London lows, Tokyo highs, Tokyo lows, and expect reversals at all these points, or previous day high, previous day low, previous week high. You can't target these areas of liquidity and just expect reversals right away. You also have to look at how the market is trending and what we're respecting. If we're respecting high time frame bearish points of interest, we'll probably stay bearish until we see a high time frame reversal and a break of structure to the upside. Let's say if we're bearish, then you should be worried. On gold, I'm not worried, because in the grand scheme of things, you look at it, and on the 4-hour chart, we're seeing a fill of this imbalance, and we're respecting it. Yes, there's a slight break of structure to the downside, which may lead us to, even fill out this daily or this 4-hour or even this daily at the lowest. But in the bigger picture, we've been super bullish on gold. There is nothing telling us that we're going to reverse trend completely. But of course, when we have these small retracements or pullbacks, we're going to capitalize on them. But it doesn't mean it's a reversal, because remember, pullbacks and reversals are two completely different things. A retracement and a pullback are pretty much the same thing, which is just, we're trending up and then we go down. But a reversal is like we go up and then we're completely smashing all these targets and we're going down, we're tanking, we're sinking as an asset. Or in the opposite side, we're super bearish and now we're bullish. There's nothing that really concerns me here for gold that would make me say we're not going to continue to go higher. I think we filled a really high time frame fair value gap, and we're also sweeping liquidity right here. So this looks pretty solid for us to continue to go higher. And so my bias remains bullish for gold. And this applies to every asset that you trade. It doesn't just have to be gold. It could be the NASDAQ. It could be Bitcoin. It could be UJ, EU, USD CAD, whatever it is that you're trading. This applies in the same way. Order flow is the most important thing with how you trade, and looking at the overall picture of how the market is moving is going to ultimately be what makes you a ton of money. So I hope you learned something. And if you want access to these signals that I send out, because this was actually a trade that I sent out to my community, and no, it's not a paid community. This was completely for free. And here's the receipt. You can see, here's what we closed. And this was to our free trading community on Discord. All you got to do is check the link in bio and you get access to that. Or if you want to work with me one-on-one at a higher level, again, there are opportunities for that. So again, check the link in bio. But if you just want to catch an overview of all the trades, I'm going to be doing this on a consistent basis on this channel. And honestly, the best idea that you can probably have is to take what I'm teaching you, apply it to your own work, backtest it, and using other things that you've learned, maybe this can put things together that would have otherwise just kept you stuck or made you unprofitable. Because at the end of the day, profitability is the goal. Taking bits and pieces of successful traders and successful trades is how you win. That's what I did to surround myself with the right people. Because at the end of the day, you are the product of your environment and the knowledge that is being put on you. So keep learning, keep doing your thing, keep putting the work in and the hours that go a lot of the times unnoticed. That was a trade recap for XAUUSD today. I'll see you in the next one. Take care. Peace.